The biggest finance story of the day by far, those strong jobs numbers we've been talking about, but they have also had a big impact on the dollar and on the money markets too. Ross Greenwood with me now. Ross, the unemployment rate, 5.8, more people in work than before the pandemic. Clearly good news, but what's happened, what's the scenario when JobKeeper ends?
Well, that's the scenario everybody's trying to work out now. Even the government itself concedes that there is going to be some sort of downturn in employment when that takes place. The question is how much. What you do know right now is that there is momentum in the economy. And even the fact that most of these jobs, 88,000 jobs that were created over the past month, have largely been full-time jobs. A large number of them have come for women and also for younger people, which is great news to see them engaged in the workforce. It's also good when the government has people in work because that means people are paying taxes to the government and not as many people are taking unemployment benefits from the government. So the budget position does improve. But in regards to it, many economists, including Treasury itself, think around 100,000 jobs could go with JobKeeper ending. Now, that's to be seen. But let's go to Gareth Aird, who is the Commonwealth Bank's Head of Australian Economics. We spoke to him just a short time ago.
I think the big looming event, though, for the labour market is the expiry of JobKeeper. That obviously occurs at the end of March. We won't get an official read that captures the expiry of JobKeeper on the labour market until the May employment report. There's a little bit of a quirk with the way the ABS accounts for these things. Basically, if people are stood down in March because of the expiry of JobKeeper, that actually won't show up in the April labour force survey. We'll have to wait for the May report to get a clean read on where the labour market is post the expiry of JobKeeper.
And Ross, Gareth suggests, understandably, jobs at risk at the end of JobKeeper. The Treasurer says that that's a possible scenario too. Is that what that airline mini JobKeeper initiative is all about?
JobKeeper you have when you're not having JobKeeper, I would suggest that's probably right, Kieran. Yeah, and that's exactly what it's about, because remember that Alan Joyce had really warned the government and indeed Josh Frydenberg that because international borders won't open until at least the end of October, that's what Qantas is recommending, that's what the government seems to be saying, that there's around 7,500 Qantas international flight staff that are without a job between now and the end of October. And so the government has put in place, it seems, a JobKeeper light for the airline crew, for them, for Jetstar, and also for Virgin staff that might be stood down. Now, this is clearly not going to be anywhere near as much as what JobKeeper currently is, but it's again to try and keep these people connected to the airline industry until really the borders open, because the other problem would be how people keep up their skills and how indeed when the borders do open, we can all get back into the air and fly to international destinations. But let's pick up again a little of Josh Frydenberg in that press conference today, really acknowledge again that jobs are at risk when JobKeeper ends.
And it will be bumpy, it will be challenging, and the economy will continue to go through the transition. But just as JobKeeper ends, the Morrison government's economic supports continue.
Yeah, so that's a real dilemma. But because these job numbers today were so good, there's another aspect of this that you've got to look at, and that is the stock market and the money markets. So if we say, for example, go to the stock market first, today the ASX 200 dropped by 0.75%. Now, the reason for that, and you can see it fell pretty rapidly today as the market sort of got their heads around this unemployment number. And the reason for it is really because at the other side of it, you've had money market interest rates starting to rise. So the long-term government bond today rose from 1.74% out to 1.8%. And as a result of that, the Australian dollar has taken off. And of course, if the Australian dollar rises, if long-term interest rates are rising, that's not good for asset prices. That's not necessarily good for Australian companies. And so if you like, this very, very good news on the jobs front today ended up being not such good news for the markets overall.
Ross, thank you.